Well, let's get you updated on the latest in our grain and livestock market activity by looking at our grain trade in Chicago. Let's pull up that corn market and take a look at that March contract. Right now, we have the March down 3 1/4 at 349.5 per bushel, and that's on the low of the day. July down 3 at 366 1/4, also on the low of the day. And let's go to the soybean market right now. In the soybeans, you have your January down 3 1/4 at 986.5, March down 3 1/2 at 998, so still under $10 right now. In the wheat trade on Chicago, we have March now down 6 at 413, just one tick from our low of the day. And new crop July down 5 at 440 3/4. In Kansas City wheat, we have the March contract down a nickel at 413. July down 4 1/2 at 442 1/2, one tick from its low of the day. And if you look at the Minneapolis wheat trade here this morning, we have the March contract unchanged now at 611 1/4, and if you look at July, we're up 1/4 cent at 624 1/4, and in the cotton market, you have your March contract currently trading 42 lower at 73.30 cents per pound. Let's go to the trading floor in Chicago, find out what's going on. There we have Mr. Todd Bubba Horwitz standing by. He's with BubbaTrading.com, and Todd, we had a couple overnight export sales announced by USDA. Trade didn't seem to care again, did they?
Well, Marlon, you hear of the chamber of misery? We're in the chamber of misery right now. You know, it's very quiet, it's very slow, and of course, we continue to see these slow markets, we can continue to see most likely some pressure and a drift lower. Again, as long as equities continue to push higher, it really doesn't matter what happens anywhere else. There's going to be some pressure here in the grains, and of course, we're seeing this continued. Now, the key here is corn and wheat have already kind of broken down, but I think there's probably a buy spot here. I mean, I'm personally long, and I'm looking for it to buy more. Soybeans 985 is a monster key level that must hold, or they will also join the unfortunate party of being lower.
Okay, so we have new contract lows in the wheat. How far away are we in the corn?
We're not all that far, and of course, you know, could we get there? Sure, but again, I think that these are really great buying opportunities from at least from a speculator or an investor standpoint. Obviously, if you're an owner, you're not real thrilled at the moment, but that's why I would recommend that anybody who is an owner would store versus trying to sell in the open market. This market has become extremely quiet and lack of interest, and of course, they're going to continue to try to squeeze prices down as the commercials are still short and pushing very hard. They haven't been able to really break them, but they've certainly made it miserable on the way down.
Do you normally see a turnaround in the fund positioning on the corn and the wheat where they're heavily net short right now? But do you see that turnaround by the first of the year normally, or does it take more until maybe March?
Well, I don't think it'll turn around, Marlon, until they actually get trapped, and I think that's what will happen. Is that we'll start to see some bullish activity, and then they'll start just to cover, and then before it's done, they'll get squeezed out late at the top, and I think that's something that we look for. But again, knowing exactly when, it's really hard to call that. I mean, we're in basically the slowest 2 weeks of the year coming up. You know, after this week with the Fed meeting and options expiration, the next 2 weeks are going to be really just very quiet. There won't be many people speculating, there won't be many people trading. So we'll see how it trades out. But again, they do not announce themselves, so it could happen at any time. But I wouldn't expect anything great until after the first of the year.
All right, before we get into our break, I want to take a look again at the U.S. dollar value and our energy markets too here this morning. And let's go ahead and take a look at the dollar index. Currently, December futures are down 70 points. We're at 93.800. March down 120 points. So on the crude oil market on West Texas Intermediate crude, we are higher by about 23 cents on that January contract. It's priced at $57.59 per barrel. And on the heating oil market, on the NYMEX in New York, we have the January contract about 1.9 cents higher at 194.8 per gallon. That's how they trade their diesel fuel. All right, Todd, we'll come back here in a moment, and I want to pick your brain about our livestock trade, see what's going on there. If there's anything noteworthy today, we'll talk about that in just a moment. It looks like the Class 3 milk market firming up a little bit today. It looks like it's up about 4 cents at $14.42 per hundredweight on that January contract. We're back talking with Todd Bubba Horwitz of BubbaTrading.com in Chicago. He joins us to take a look at our livestock trade. And let's dive right into the prices here. Todd, get your thoughts on this. The cattle market has been on a softer trend here lately, and we're down a dime again on February. 118.20 is now our last trade, just a dime from our low of the day. April down 20 cents, right at 120 even per hundredweight. By the way, that nearby December contract is at 115.53. That could be a little bit concerning when it comes to comparing it to the cash trade out there in the plains. Now, if you look at the feeder cattle market, on the feeders, we have January down 32 at 144.90 per hundred, and you have the March contract down 27 at 143.05 per hundredweight. Both of those about half a dollar off their earlier highs this morning. So as you take a look at the early movement here in the cattle trade, what do you think?
Well, I think when you look at the fat cattle, I think 118 is probably a pretty solid level to jump in. You know, we've had a lot of pressure since we were up at 129. I think now you look for an opportunity to step in and look for them to reverse at some point. Now they're going to suffer from the same malaise as the grain market, so there's just not a lot going on. But I think we have found some great levels here in the fats. I think the feeders are just now searching for a bottom and where we'd want to step in. And you know, I thought the bottom would be 148, as you know, and of course we're now at just under 145. But I think the way the week started last week and the way that Friday ended, closing on its low tick of the day, I think right around here somewhere is probably an area that we're going to look to start to accumulate and start to buy. I think we're at these levels now that it now makes logical sense to now step back into these markets and look to be buyers. And if we get some help from the equity markets, which would be a little bit of a sell-off, that would bring some new money here, that would even help propel us farther. So overall, I am no longer a seller. I am a buyer. Now the only question is, where am I going to buy? And I am looking very closely at these levels here. The one thing that throws me off is how quiet it is.
Friday afternoon on the beef cutout values, they were both higher. Choice was higher, Select was higher, but Select was much, much higher, relatively speaking, than what the Choice was. So they narrowed up that spread by over $1.50. Does that concern you any? Some analysts say that they prefer to see the Choice gaining on Selects if it's meant to be a bull run.
You know, nothing really concerns me when it comes to that noise, because to me it is really just noise. It's outside the box. It's things that have already been priced in to the general markets. Again, news is already old by the time it hits. So the money already kind of has a feel for that, which might be why we're seeing the trade as it is. To me, we're at levels that I want to step in and buy. I don't really care what is the outside noise showing me. If the charts and the money shows me that it's okay to step in, I'm going to step right in and start to buy.
On the lean hog trade, let's take a look at where we are now trading, and currently on the lean hog we have February down 53 at 68.32, April down 40 cents at 72.72. Todd, are you a buyer on the hogs today?
66 is where I'm looking to buy. You know, of course we thought 72 was a pretty good sale, and we're looking for 66 to be a buyer. And when we get there, then I'll evaluate it. At this point, I think they've got more room to go on the downside. I do believe these markets got a little bit ahead of themselves at the end of the last quarter, and they pushed a little bit too far. And I think that was more of a short squeeze. And you're now seeing the result of when that happened. And now we're kind of drifting lower and can't seem to find a bottom. 66 would be my number there, and then I'd look to be a buyer there at those levels. And, you know, we're not that far away. I mean, we're basically only a day away, just like tomorrow.
And you're talking February, right?
Yes, sir.
Okay, just wanted to clarify. All right, thanks, Todd. Todd Bubba Horwitz of BubbaTrading.com in Chicago. There you have all of his thoughts on what to do.
Always fun to hear Todd's thoughts, because he certainly puts them out there.
Yeah, and sometimes he'll have differing opinions than some others, so
Exactly.
It's always interesting.
Very interesting. Thank you.